Hello folks, this is Jeremy Cloud with a special edition video update on Britain's recent vote to exit the European Union. With all the market turmoil, we felt this was a good time to reach out and share our perspective. Please stay tuned at the end for a required disclosure statement. We're going to answer 5 main questions in this call. 1, what is the Brexit and why does it matter? 2, how could the Brexit affect U.S. markets? And 3, what impact could the Brexit have on a global economy? 4, how could the Brexit affect the U.S. economy? And 5, what should investors be doing right now? So let's start by taking a step back and asking, how did Britain get here? To answer that, we have to go back in time and take a look at some history of Britain and the European Union. Britain originally voted to join the European Economic Community in 1973. In 1975, Britons voted to remain within the new European Community, which then becomes the modern European Union in 1991. Economic and political circumstances have changed drastically since the 90s, and British citizens demanded a new national referendum on EU membership. The issues at stake were complex and involved British sovereignty, trade, regulations, and immigration policy. Ultimately, the vote was about this: did Britain see a future within the EU or did it want out? As we saw, British citizens voted to leave. Now, let's talk about the effect the Brexit is having on markets. The vote to leave surprised investors around the world who reacted by selling. This is not an unexpected result because markets hate surprise. History tells us that recent market movements are probably an overreaction in response to the fear and uncertainty. If we look back, we see that since World War II, when there have been political shocks like this, markets tend to oversell and then rebound in the weeks and months that follow. That could mean that stocks aren't done tumbling. Though the past doesn't predict the future, we can look at other similar events as a guide. During the crisis around the Japanese earthquake in 2011 and the European debt crisis in 2012, markets experienced double-digit losses and then recovered within 3 or 4 months. Will that happen this year? There's no way to know. While political events like this rarely have long-term effect on markets, we should also keep in mind that 2016 has brought many geopolitical challenges to our door and headwinds are getting stronger. We should expect a lot of volatility going forward and a lot of headline risk. Headline risk is what we call it when markets overreact to media coverage of events. We can also think of it as Chicken Little syndrome. Now let's talk about the potential economic impacts of the Brexit on the global economy. In Britain and Europe, a lot of the risks are political in nature. In Britain, it's possible that this vote will splinter the United Kingdom. Northern Ireland and Scotland both voted to remain within the EU, and they may vote to leave Britain in order to rejoin the EU. Britain also faces new elections in October once current Prime Minister David Cameron steps down. You can bet the negotiations around leaving the EU will play a huge role in the elections, and it'll get messy. Exit negotiations are also likely to drag on for months and possibly years and be the source of a lot of political footballs. We can expect plenty of volatility in the financial markets as those negotiations are hammered out. Economists also worry that Britain could lose a lot of multinational corporations who rely on access to European markets and the free movement of European talent. London is the center of Europe's financial world, and a loss of those financial firms would be a major blow to the British economy. The fallout from the Brexit could be enough to push Britain into a recession. Europe has several key elections coming up in Spain, Italy, and France that could be affected by Britain's vote. We'll be watching these elections carefully. One of the big worries experts have is that Britain's vote will be the first of many anti-EU votes that could cause a rush to the exits by other EU member countries. Britain leaving is complicated enough. If a member of the Euro currency union, like the Netherlands or Greece, left, negotiations would be even more complex. No one knows what the breakup of the EU would look like, but it wouldn't be good for global economic growth. I also want to point out that many economists are a lot more upbeat. They believe that the most apocalyptic scenarios are unlikely to play out. Since Britain and Europe need each other, future negotiations are likely to be favorable to both sides. European leaders are also a lot more likely to make needed reforms to keep their citizens happy and avoid Britain's fate. How will the Brexit affect the U.S. economy? That really depends on how the divorce is negotiated. Again, there's no consensus among economists. Here's what we do know. Trade with Britain accounts for just 0.31% of U.S. gross domestic product. So British problems with trade won't necessarily affect us. We don't foresee any structural changes to the U.S. economy as a result of the Brexit. Some companies and sectors will be more affected by others, particularly those that have more revenue exposure to the UK. We could see an effect on their corporate earnings. However, the dollar is often viewed as a safe haven in times of international turmoil, which is pushing the dollar's value up versus other currencies. A stronger dollar may weaken demand for U.S. exports, which may drag down economic growth. We should keep in mind the fact that the U.S. is a consumer-driven economy and that wages, the housing market, and improvements in personal finances all support consumer spending right now. Will the Brexit be enough to push the U.S. into a recession? That's not really likely, though it could contribute to weak growth in the next couple of years. We think a major factor will be whether the market turmoil is enough to have a negative impact on businesses and consumer confidence. If so, we could see a greater effect on the U.S. economy. Britain's vote will likely affect Federal Reserve policies this year. Post-Brexit expectations of a rate of increase this year have gone down tremendously. Where predictions of a September rate hike were at 30% before the Brexit vote, they now stand at 0%. In fact, some experts even suggest that rate cuts may be back on the table if economic growth slows. Let's close by talking about what investors should be doing right now. First of all, tune out the noise. We're going to see a lot of terrifying headlines about the Brexit, and it's not good for your mental or financial health to be glued to the media. Let us filter through the news for you and communicate what you need to know. It's one of the most important parts of our service to you. Second, focus on your own financial goals. Do you know who isn't exiting the EU? You aren't. America isn't. Political events don't change your goals, and it's critical to avoid emotional reactions. When markets stumble, the smart move is to sit back, take a look at fundamentals, and make prudent changes where necessary. We'll be in touch personally if we decide we need to shift your strategy. Third, regardless of which direction markets go, we can expect a bumpy ride. Fear and uncertainty are going to rule the market for a while, and stocks may tumble even more. Don't panic. It's too soon to tell what the Brexit will mean for markets. No one can agree on a probable outcome yet. Though we don't think the Brexit is the end of the world, we want to acknowledge the risk it poses to markets. We believe that bull markets don't die of old age, but we are facing growing headwinds from abroad that may threaten the bulls. We are closely watching economic data and market research as it comes in, and we will be communicating continuously with you in the weeks to come. Right now, your job is to stay calm and focused on your goals, knowing that there is a serious professional who is taking care of the details for you. You can stay abreast of critical information in our weekly market commentaries. monthly video updates, and our upcoming halftime report. We will reach out to you personally if we believe that changes to your investment strategies need to be made in light of our analysis. If you have experienced any life changes or shifts in your goals that warrant changes to your portfolio, please let us know as soon as possible. Thank you again for tuning in, folks, and this is Jeremy Cloud signing off for the month of July 2016.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services offered through Cloud Investments, LLC, a registered investment advisor in the state of Alabama. Insurance products and services are offered through Cloud Financial Incorporated. Cloud Investments, LLC, and Cloud Financial Incorporated are affiliated companies.